Welcome to Infinity Capital, everyone. This is Raj. Let's discuss Glenmark Life Sciences today. This is an IPO which came out recently, and the stock has been continuously falling. However, there is some value that is emerging out of this stock, and the numbers are looking pretty good. That is the reason I am looking at this stock. So let's find out about this company. It's a part of the Glenmark group, the Glenmark Pharmaceuticals. It's a subsidiary, and it's an API manufacturing company. All right. So basically, they have two segments. They make generic APIs and complex APIs. So that makes 90% of the revenue, and then they have the CDMO operations that makes 8% of the revenue. So this is the main meat of the business, generic and complex APIs. So it's a leading manufacturer. These are the therapies: cardiovascular, diabetes, pain management. These are the main therapies that they are catering to. They are working on oncology as well, so they are planning to come up with a few APIs for that therapy as well. Right, so they have leadership in select high value non-commercialized APIs in chronic therapeutic areas. In the CDMO business, basically they are backward integrated, so that is a good thing for them. And there's not much written about what kind of clients that they are catering to, so we'll probably find that out in future conference calls. So they have 4 manufacturing facilities, and we'll find out more about them in the investor presentation. So currently they have 120 molecules, and top 10 products account for 66% of the revenue. So there is a revenue concentration in the top 10 molecules, and this could be a risk in the business. So if the sales of any of 1 or 2 or probably more than 2 products go down, that can hamper the revenue of this company. Right, so the company is looking to launch 8 to 10 new molecules every year. So they have around 400 DMFs as of March FY 21. Right. Interesting thing is they've had 38 inspections, and there were no warning or import alerts. So this is something that I look for in pharma companies. Regulated markets contribute 71% of the revenue, which is the outside of India market. 30% comes from India, and majority, I think a large section of that goes to the parent company, Glenmark Pharmaceuticals, right? So they export to Europe, North America, Latin America, Asian countries. So exports make 43% of the revenue. Like all big API manufacturers, even they have an R&D center, right? So the R&D center has 14% of the total employee strength. Right, so they have around 39 granted patents and 39 pending applications. Right, so 2.4% is the total impact on the revenue. The spend on R&D is 2% of the total revenue. Okay, so company's clientele based is 16 of the top 20 generic companies globally, and the top 5 customers, including parent Glenmark Pharma, as I said earlier, account for 56% of the revenue. So top 5 companies are bringing in almost 60% of the revenue, and this could be a risk in the company. So something that we need to be aware of. Company is looking to increase its market share. Okay, so they are talking about what they are looking to do. So they are also working on a capex, trying to increase the capacity in Ankleshwar and Dahej. Right, so they have 3 brownfield capex and 1 greenfield, if I'm correct. Just find out from the conference call. All right, so market cap is 7,500 crores. Stock is trading at a PE of 21. If we compare this to all the other API manufacturing companies like Suvain, Laurus, Syngene is largely into CDMO. Heikel and all the other companies, it's trading at pretty cheap valuations. Price to book of 3.81. Promoter holding is strong. It's 80 to 83%. They might dilute going forward, so we might see some institutions coming in. right? There is no debt on the company, and there is no pledge, so that is excellent, right? Okay, moving forward, let's just look at the investor presentation quickly. So this is the investor presentation. Dr. Yasir Rawji is the managing director and chief CEO of the company, right? So they have EBITDA margins of around 30 to 31%, which is excellent, right? Net margins of around 20%. All right, and just a second. These are the quarter-on-quarter performance numbers. I want to show you some important stuff. Yes. So generic API revenue is 90%. CDMO is 10% only. So 3 commercial projects with multinational and specialty pharmaceutical companies. 4th project to be commercial by Q4 FY22. So they have around 3-4 projects that they are 3 projects they are working on. 4th is going to be commercialized. So we might see some more traction in the CDMO business. And this is the therapy mix. So your cardiovascular amounts for the largest revenue. Then central nervous system is around 7-8%, right? 8-10%. Then we have the diabetes, pain management, and others. Others make up almost around 30 to 40% revenue. But what we've seen is that this others revenue has, overall the others revenue has gone down, and CNS has gone up, central nervous system has gone up. So this looks pretty good. The any specific therapy gets you more margins. I don't know what are the others, what have they basically put in the others, so we'll have to find out probably from the conference call. Right, so they have filed 412 DMFs and CEP across major markets, right? So this is the information. You can come here and check on the conference call, and this is the important information, guys. So Ankleshwar, Gujarat, the current capacity is 550. Okay, these are the approvals. Okay, Dahej is 149 kiloliters, Mohol is 49, Kurkumbh 24. So last US FDA inspection happened in 2019. So we, and then COVID happened. So 2021 is over. So we'll, the next inspection we'll have to see, if they pass it properly, or if they have any issues or not. So if there are any issues, then we could have problems going forward, in the stock price as well. And so they are talking about their R&D capabilities. The 2.1 percentage is the spending as of the overall sales. They have filed 121 unique molecules, across the globe. So 26 products in development. So they have around 7 oncology products and 4 iron complex. So this oncology products are high margin products. Right, so this is what they are working on. These are the number of cumulative filings, total number of filings. They have good amount of filings, so let's see what works out for them. And what is the strategy going forward? So geographical expansion, focusing on regulated markets. Obviously, it's the biggest market. That's where the money is. Pursue second source opportunities with top generic generic players. So basically source more clients. Planning to ramp up the CDMO portfolio. So CDMO in India, they are pegged at very high PE valuations. So if you look at Syngene, Laurus, Syngene, Laurus, I'm not really sure. So oncology, iron compounds, they are working on that. This is the new growth. Capacity expansion, so greenfield capacity at Solapur, brownfield at Dahej, oncology block, backward integration is happening. So 250 kiloliters plant at Ankleshwar. So this is what they are doing. So this is the future capex plan. They are going to do 3 brownfield and 1 greenfield. So the land has been acquired for Solapur. They're putting up API division. Oncology division, it's a brownfield capex. So generally brownfield capex is more revenue and margin accretive. So, it will add to the revenues very quickly. Then they have a brownfield in Ankleshwar, capacity 550 liters. So, in the second quarter of FY23, it will be operational. Oncology will be operational in first quarter of FY23. This Dahej is already gone live, right? So 70-80% of the capex will come live in by second quarter of FY23, considering they have a 3-4 month delay. So we can see more revenues coming in. So their reactor capacity is going to be almost triple its size, or quadruple its size, triple its size as compared to 2018. So revenues can come at a very higher clip, right? Let's quickly just go through the quarterly numbers. So sequentially the revenue is pretty high. PAT also came at a higher level, although sort of margin suffered a little bit, but since the revenue was higher, and if we compare it to last year, the numbers are also pretty robust. Year on year basis, their revenues have doubled, and their profits have not doubled, but their profits have gone from 196 crores to 352 crores. Right, balance sheet front, they have, I think, around some 426 crores of cash equivalent, so they can use this, for their further capex. 388 crores of cash from operating activity, so that is excellent. That will help them do further capex without taking any debt. So FIIs have around 8% stake, promoter around 83%, public holds around 8.67%. So this shareholding profile is fantastic, right? Okay, let's look at the technical chart. So basically this was offered at around 690, between 690 and 700 rupees. And if we look at the stock from its recent high, the stock is down 24-25%. However, this is pretty normal, because if we look at other API companies, even they have corrected around 20-25%. Technically, I think the selling in this stock is over. If the market doesn't correct further, I'm expecting this stock to basically sort of base out over here and then start moving up, right? So I have bought this stock at around 630, and I'm looking to add more. So I bought a small position to test, to see what's happening. So however, what's encouraging is, even though markets corrected, this stock did not make a new low. So that's a good sign technically. Let's see if it sort of consolidates in this area. So my guess is that this stock will consolidate between just a moment guys, between 600 and 670 in the coming months, and then it can form a base and then start going up. So now I'm waiting. If the stock corrects another 10% from here, which looks a bit unlikely, if that happens, then I will add. If not, then I will wait for it to sort of consolidate here, and once it starts consolidating, and then by that time we'll have quarter 3 earnings as well. That will give us more sort of a better understanding of what's happening with the company. The profits are coming at a higher clip, or if the profits are not deteriorating, if there is no big material problem with the revenues, then I will continue to hold it, and for at least for 2 to 3 quarters, and see how the revenues are coming. Overall the revenues are pretty good, and looking at 30% EBITDA margins, this looks very attractive in my opinion. So see, this is going to be an earnings play for me, because their capex, whatever capex is happening, it's going to come live in quarter 3. So that is 4 more quarters away from here. So let's see how this pans out. But overall, at the onset, it looks pretty good. I'm expecting it to reach at least its recent high, so 27-30% is what I'm expecting in the near term, in the next 2 quarters at least, right? So this was the analysis, guys. This is not a buy sell recommendation, it's an educational video. Thanks a lot for watching.